Well, good evening, everyone. Welcome back to the channel. So, with the high dividend payouts of QYLD and JEPQ very likely being unsustainable, particularly QYLD being, not such a great fund in terms of actual performance, and with JEPQ, it's paying close to a 16% payout, but it's very unlikely that that's going to stay at the level. We've already seen a drop because of the way the Nasdaq has dropped. So, what I wanted to do, because I think a lot of us as investors, we focus on ETFs to get those high dividend payouts, but really some individual stocks pay much higher dividends than you would think. I mean, traditionally, we think of like the AT&Ts of the world and like the Verizon's, telecom companies that are paying anywhere from 4 to 7%. And typically, we don't look at stocks as being able to pay anything upwards of 7 to 10%. But I found a few of them that actually pay up to 16%, which is equivalent to the dividend yields we're getting in some of these covered call ETFs. So I'm going to go into that now. Let me share my screen. I didn't forget this time. So let's go to Yahoo Finance, and let's start out with the first one that I found, which is Icahn Enterprises, Carl Icahn's company. So currently trading at $52.61, which is very comparable to the JEPQ. And look at this dividend, 15.38%. Very similar, almost on par with the JEPQ. So, and now the important thing, when you pick a high dividend yielding stock, typically the price of the stock, we don't see like the double dip scenario, which if you can find it, it's golden. When you see the stock steadily appreciating in value and paying out a dividend, because that's like free money at that point. But this one, if we look at it, it's a little choppy. I mean, going back to last November or going back about a year ago, it's about flat, which honestly, in this market, flat is really not bad at all. So if we look at November, December of last year, it dropped a little bit, came back up. We see it's kind of choppy. Now we're into February, March, April, May. We had a big drop in June, but we've come back. We were up to 50, almost 55, August 8th. Come back a little bit. Now let's look at the 5-year performance. So back in 2018, we were up to $77 a share. Dropped during the pandemic and hovered around the same. Actually, this one didn't really recover during the pandemic. So this stock has been relatively flat, but it's paying a 15% dividend. And you know what? If you understand the dynamics of dividend stocks, when a stock, and again, the traditional growth model of a stock, if any of you have had finance class, you've seen, I'm sure you've seen that basic like D minus G formula, like D minus G over G or something. So the dividend component is very important in the valuation of a stock because obviously that subtracts out of, it's basically earnings paid out to the investor. So, and that comes directly off the price of the stock. So if this is $8 per share, every time this dividend is paid, and I'm not sure what the frequency is, but we'll look here in a second, but this $8 comes right off of the price of the stock on the ex-dividend date. So you can see here the last time it was paid was August 18th. Interestingly, there's no 1-year target estimate here. Earnings per share is negative. Market cap 17 billion. Let's look at what earnings have done the last 4 quarters. Look at this. You can almost draw a straight line here. Quarter 3, 2021, quarter 4, and then quarter 1 and 2. The estimates, wow, talk about originality there. That person seems like they have an easy job. Whatever analysts came up with this, it's like the earnings estimates are like a straight line, but it's missed 3 out of 4. It beat quarter 1 of 2022, missed, and then by October 30th, by Halloween, we'll have the earnings for Icahn Enterprises. Typically, I mean, without really doing a deep dive, I mean, this has been, I would just off the top of my head think this would be a good investment, just knowing what I know about Carl Icahn. He's known to buy into good companies. He's been around since the 80s. Had looks like 2 run-ups in the history of the stock in the 07 before the crash, and then in 13, 14, then started to drop back again. But overall, it looks like the price stays relatively stable. Now let's look at historical data to see how often the dividend pays out. And I typically, when I do these videos, I've been mainly focused on like these covered call ETFs and mainly ETFs. I don't talk much about mutual funds because I think they're garbage. Well, they do okay, but the expense ratios and the costs, the hidden costs, are just way too high. So for dividends only, let's look. We'll go a year out and let's see. Okay, so basically the $8 dividend is broken up into 4 quarters, $2 per quarter. See, November, March, May, and August. So overall, not too bad. So if you got, let me see if I can pull up my Google sheet here. Let's see here, Google sheet. We'll just do some quick numbers here because what's a good financial coaching video without doing some spreadsheet analysis, right? So let's see here. Okay, why is this not coming up? Come on. Oh, I have StreamYard open twice. Um, Here's something I came up with in one of my last videos that I actually wasn't sharing. I called it the dividend paradox. The true paradox, come to find out, is that I actually wasn't sharing my screen when I thought I was, but it didn't really affect the views. Like I say, anytime I can just mention the word dividend or QYLD or JEPQ, and my views are always higher for that because I really believe, and part of the reason I talk about dividends so much, that's the true niche of my channel or sub niche within the finance space is dividends. So, I just start talking about it. I get the most viewers. So I keep on, they say stick to what you do best at, right? So, okay. What I want to do here, I want to say for Icahn Enterprises, ticker symbol IEP, say we put 10,000 into this one. IEP, okay. Center that. That's the important part, right? Title centered. The real value add. Okay, so $10,000 at the current price of 52.61. Okay, so this divided by 52.61 is going to give, not in dollars, it's going to, in total shares, 190 shares. Wait, something here. Yeah, wow, it's rare that something is that even. Okay, so now with the 8% dividend on $10,000, that's going to be $800 a year. And no, I don't want to autofill this. So in terms of shares, you would get 15 new shares per year. So with that being said, let's move these to this column over here. So you start with 190, potentially you end up with, what did we say, 205, 206? Just say 205, just do it manually. Okay. So in year 1, year 2, year 3, year 4, year 5, and this is just doing the DRIP, the dividend reinvestment program. So you just reinvest this, which it looks like this dividend has stayed relatively the same over time. Let's go back further, actually, because I only looked at a year. So let's see. Okay. Oh, they raised it in 2019, so it was $1.75. It was $1.50 before then, and it's held during this crunch we're in. It's held. So in 2013, it became a full dollar. Then it went up to $1.25. So it has had a decent history of increases. Back in 2010, it was only 25 cents. In 2011, it was they cut it in 2011. It looks like, but then it came back up, and then it hit $1 per quarter. Then $1.25. Then $1.50. This was as the economy was recovering, which we just kind of went through this in my last video. And then $2, it's maintained the $2 even during the pandemic. So really for 3 years. So looks like the dividend's pretty stable. So if that were to stay the same, and it seems like the stock price stays relatively flat, and we can make a comparison here, JEPQ, which I already happen to have here, the growth with 15.89%. Hold on a second, I just made a stupid mistake that I caught. Unbelievable. It's not 8%, it's $8, which is closer to 16%. Anyway, at least I caught it. Okay, let me go back to IEP. Seeing this woman here with this crazy hair and the glasses. What is this? Fed's Fed's daily. Hot CPI shows the data not cooperating. This has my attention now, I'm sorry. San Francisco Fed President Mary Daly told Yahoo Finance she expects the Fed to stay the course when it comes to expectations for interest rate hikes after the latest core inflation reading came in at a 40-year high. Well, yeah, they should stay the course, but so far they're not making a dent in it. Anyway, back to something within our control here. Icahn Enterprises. Okay, so it's 15.38, and my apologies, I had a brain fart here. I did 0.08. It's actually better. So see, I presented like a baseline scenario here, but it's actually even better. So watch this. So in year 1, 2, 3, 4, 5. So in 5 years, look at that, you would double your money. And this is what I love about these high dividend payouts. Even if the stock price stays flat, you're doubling your money in 5 years. So I think I'm going to add IEP or Icahn Enterprises. I think I'm going to add it to my list of investments. Okay, and then we started out with 190 shares here. So this at a 1.538 growth rate. Look at that, you're acquiring like 30 new shares per year. So look at this here. This is how many shares you acquire just in, like I say, free money with the dividend reinvestment. You more than double your shares, which is phenomenal. Now, if you don't reinvest this money, then you're subject to whatever the stock does, which, as we've seen, the stock has stayed relatively flat. Okay, so we've hammered Icahn Enterprises home pretty well. Now let's see what other stocks I can pull out of my hat that I'm not wearing. So Occidental Petroleum was not a good candidate because that pays a small dividend, but Occidental has been a good stock for this year because of the way oil prices have behaved. AT&T pays a good dividend, but I'm not a fan of it anymore. I'm actually looking to divest the shares I have in AT&T. So another one I came up with here is ticker symbol UAN. And this is another one that you wouldn't expect this for a stock. 15.86%, which is identical to JEPQ. So this one is Cvr Partners Lp. Now this company I don't know much about, but it just came across my radar this week. And so let me go through the bio of it here because I know about Icahn Enterprises, but this one is a new one to me. So let me learn along with all of you at the same time here. Okay, so they're based out of Houston, Texas. Cvr Partners Lp, together with its subsidiaries, engages in the production and sale of nitrogen fertilizer products in the U.S. The company offers ammonia products for agricultural and industrial customers, and urea and ammonium nitrate products to agricultural customers, as well as retailers and distributors. Cvr GP LLC serves as the general partner of the company. Cvr Partners Lp was incorporated in 2007 and is headquartered in Sugar Land, Texas. Interesting. So this is a business I know very little about, but I'm enticed by the dividend, as usual. So look at this, $20 in dividend payout for a stock that trades at $120.39 per share. Now let's do some high-level analysis here. So from the beginning of the year, now look at this one. This is a rarity for 2022. This is a stock that has appreciated in value in the year 2022. Unheard of, right? So look at this. It was as high as $158. It fell down to $91.69. And then right now it's at about 120. Had a little bit of a run up in August and September. The ex-dividend date, August 11th. And we'll look at all the good stuff when it pays out, frequency and all that. But 15.86%, that's phenomenal. So let's see here. And this is another one I'm already intrigued by. I think, well, it's definitely optionable. So I may have to look at that. I've kind of backed off the options trading here lately. Just you got to really be focused on it, and you got to have minimal distractions, and you've got to pay attention like minute by minute. And like I said, minimal distractions and all that, those are all conditions that don't currently exist for me. So I've kind of backed off of options trading. But, let's go back to okay, we did the 1-year view, now the 5-year view. Ooh, look at this. 32.50 back 5 years ago. So this one has had a nice appreciation in value. That's awesome. Let me see how long this company's been around. Because literally I know nothing about this. So it looks like the data in Yahoo Finance goes back to June 2011, 224 share. So it crashed down and bottomed out at like $9 a share during the pandemic, and then it came back up. So it's down overall from where it was like 11 years ago. Now let's look at historical data. Historical data for this one, we'll look at dividends. Let's see oh, awesome, look at this, I've got comments. See, I do a dividend video and all of a sudden I get comments. So what I'm gonna start doing, the more engagement I get on this channel, I'll periodically peer back over to the live stream to look at the comment section. So far here I have comments from John the Simp, JEPI EOS, may re-add RYLD or XYLD. I'm kind of iffy on the RYLD and the XYLD. I did a video back on those two in March, and it's actually one of my top videos. IEP, I just don't want the K1. What's the K1? I'm not sure on that. Anyway, nice to see some live audience here. So back to this. Okay, so historical prices, dividends only. We're going to look a year out, and then we're going to go back further. Okay, so look at this. Did it just increase? So it was 293 in November, 524 in March, 226 in May, 1005 in August. So I've got to do a Google search here. What is this company here? Cvr Fertilizer. See, what I like about this, I get to teach and learn at the same time. That's like a win-win. Okay, Cvr Fertilizer, stock, dividend. Sometimes we need more data than what Yahoo Finance offers. Okay, this is from NASDAQ.com. I actually applied for a job there. That would have been a very interesting career. They're probably laying people off by now, though. Most people don't know you can actually work for the exchange. But yeah, they had openings for like analyst positions. What is this? Annual dividend $40.20. PE ratio is very low, 32.3%. That's off the charts, according to NASDAQ.com. Let's see here. 2022-21. See, this one, from what I'm seeing here, this one doesn't appear to be too sustainable. Because, I mean, I say that because it seems like the dividend really just exploded in the past year or so. So this very attractive percentage dividend yield doesn't seem like it's been that consistent, unfortunately. Let's go back to the 5-year view. We'll just corroborate what NASDAQ.com basically just showed us. So, yeah, see, 2019, it was paying a lot less. So it paid a whopping $10.05, but you're going to have a lot of people chase this now because of that. But I honestly don't know if that's sustainable. So that's a red flag for me. Other than that, everything up to this point was good, but that I'm a little iffy on. And let's go back a little bit further here. So see, in 2011, when the stock was trading higher, the stock was paying better quarterly dividend yields. 2013, 2014, 2016, and then it dropped more recently, but now it's going back up. So I'm not sure if this dividend is going to be sustainable or not, but just for fun, because I know all of you all like this, and I do too. I mean, it's fun to dream up these scenarios here, right? So this is IEP, this is CVR. We'll just say, the standard example, growth of 10,000 in this one. 10,000. See how many shares at the current price. What is the current price again? 120.39. So see, you're going to buy half the shares for a little bit better dividend payout. So for me, honestly, I would stick with Icahn Enterprises until I figure out what the K1 is. We'll get to that in a second. Let's see here. 15.86. Wait a second, what am I doing? 120.39. Okay. Divided by 120.39. 83. It's 83 shares. And then just say this sustained itself. Is this, hold on a second, is this exactly the JEPI? Almost. It's like 3 digits off. 15.86 versus the last payout of 15.89, the rolling average. Okay, so 15.86. Let's see here. Uh, year 2, 3, 4, 5. So almost the same. But see, the thing is, you have less shares. So with less shares, you're going to be growing shares slower too. So see, in the case of Icahn, and Carl Icahn, he's a very smart man. He's like, to me, he's like almost the equivalent of a Warren Buffett in the business world. Um, so I mean, I would definitely invest in his company based on that alone. So you're going to go from 83 to 173 shares. So this minus this, 90.27. So see, you're going to have way more shares here. Whereas here you would only have this 173. Here you would have like more than double, significantly more than double. Okay, so with that being said, IEP so far is the takeaway for me. That's the one that I definitely want. Now, what other ones can I pull out of the hat here? Let's see. First, let me go back here, check real quick. Let's see. K1 tax form. Okay. Yeah, I agree. You get busted on taxes when you're not in a Roth or an IRA in general. USA. I'll offer my professional opinion on that in a second here. USA and Zim. Okay. USA and Zim. Okay. First, let me get to. I had another one on the list here. CVR. Oh, Devon Energy. Devon. This is a good one. Devon Energy. DVN ticker symbol. But I'm pretty much sold on Icahn Enterprises as far as individual stocks. So, okay, this one's $68.02, down 6% today. So 8.58% dividend payout, $6, almost a 10% if the stock drops further. Let's look at the history of the stock performance. Let's see. Okay, so it was 48. Oh, another rarity. Well, you know why? Because this is energy. Energy is like one of the only things that's done well this year. Because you know all those greedy corporations, they're just in business to make profit, right? Just kidding a little bit. But yeah, so oil companies do seem to be making decent profits this year. So it was at 48.89, and then 77.02, and then it dropped, and then let's see here. Look at this. So this looks golden here. So earnings estimates consistently go up, and it consistently beats since Q3 of last year. And then this estimate, now this could be an earnings blast potential. Who knows? Because you see the estimate here is lower than it was the last quarter, so might have to keep your eye on that. As far as the dividend, it's not as good as Icahn, and the stock is higher than Icahn, so I'm not going to skip the analysis on that, any further analysis, other than, let me just look at one more thing. I'll look at how the dividend has performed as far as payout frequency. So let's go here, dividends only. We'll go a year out, and we'll look at 5 years. Okay, so it pays quarterly also. We'll look at 5 years real quick, and then let's see. Okay, yeah, so this dividend has actually gone up significantly. It looks like it's gone up because of the run up in energy, you see, because literally it started in 2021 and obviously has really accelerated this year. So, and then one more thing, and then I'm done looking at Devon Energy. The 5 years. Okay, so 5 years ago, 41. Yeah, I could see oil. We had, between the boom in fracking and the boom in domestic energy production, oil had crude oil prices basically collapsed for years, right? And then they completely bottomed out during the pandemic, and then they just recently started to come back. I thought crude oil prices would never get back to their old levels, but boy, was I fooled, because you see where we are now. So, okay, that's the 5 year performance of that. And then looking, so this one goes all the way back to the 80s. Also had another peak here before the crash, peaked a couple times, and then, yeah, it's peaking again. Okay, so that's that. Now let me look at USA and, oh, this video is long. I'm going to end it here in the next couple minutes. Okay, USA. There's something called USO, which is an oil fund. Liberty All-Star Equity Fund. This guy, I think you're the same person. It's amazing. You come up with great new funds all the time. 11.19%. That's awesome. Yeah, just keep on, just keep on churning them out. I'll research them as I can. Wow, cheap price, great dividend yield. Um, wow, amazing. Now let's look at how it's done. Has there been any? No, it's stayed. Wow, I may have to scoop this up today. This is amazing. Where do you find these? This is awesome. Um, the highest it was 845 July 2021. Looks like this one's been around since the 80s also. Or yeah, the highest it ever got to was $14 in the 90s. So wow, this is awesome. The only year it lost money, 2018. Let's look at historical data. Ex-dividend date was July 21st. Historical data, let's see here. We'll look at a year out. Let's see, dividends only, come on. Dividends only. Come on, Yahoo. Okay, so it's quarterly. Now, see, if this one did have a run up, which it doesn't appear that it will because it stayed relatively the same price, and you can scoop up a lot of this actually because it's so cheap. I mean, your money's going to go a lot further with this one. So let me just look at Yahoo likes to move around on me here. Okay, historical data. Let's go back. Maximum dividends. Apply. Come on. Apply. I didn't click options, Yahoo. Come on. Dividends. Let's try this again. See how the screen just moves around on me here. Okay, maximum. Come on. 1986. Wow. I didn't even think ETFs went back that far. I'll have to do some research now. Okay, so it looks like the dividend's pretty consistent on that one, quarterly. And then what was the other one here real quick, and then I'll end it because I'm approaching a 30-minute video here. Okay, Zim, this was called Zim, right? Z-I-M. I'm assuming this one's going to be good because, like I said, this person that comments here, you always pick good funds. So I'm looking for a double-digit dividend here, but we'll know in just a second. Zim Integrated Shipping Services. If it will come up. Oh, wait a second. This is 100%. That's impossible. Yeah, something happened here. I got to figure this out here. This is like a mystery here. I got to solve this. Okay, it was $84.50. Okay, so the stock price basically collapsed since the beginning of the year. 100% dividend yield. I've never seen that before. There's no way, if it dropped that much, there's no way it can sustain that. March, September. What the heck is going on with this one? It missed earnings one quarter. It beat the 3 quarters before. And see, this is what's happening, like, because of the economy right now, like, companies are still reporting good earnings, but the stocks are just getting pummeled. So, and then it should, theoretically, it should beat next month when it comes out, November 15th, a month from now. Revenue's good. Revenue's was actually phenomenal in 2021, and earnings caught up to revenue too. So let's see here. This one is a really good one to end with, it looks like. 5 years. Wait, is this new? No. 2021. Okay. $27. So right now, according to this, the dividend payout is higher. I can't even believe my eyes. The dividend payout is higher than what the stock price is currently trading at. So how could that possibly be sustainable? Let's look at dividends only. Dividends only. We'll go 5 years. Well, it looks like it's only been around for a year. I think I did hear of this before. $2, $2.50, $17 in 1 quarter. That's insane. Well, at least if it pays that high and the stock goes bankrupt, if it's that high, worst case scenario, you'll at least get your money back, right? So, and then 285, 475. That one, I'm gonna have to do some more research on that one because I like that one. It just seems too good to be true. I mean, if this was the case, if this is really the case, I would talk about this a lot more, to say the least. Earnings per share. Now, something I got to look into this more. This is going to be out of scope of one video here, but earnings per share 56.29, price to earnings. It suggests very highly undervalued, good earnings, market cap. Yeah, I'm going to look more into this for sure. Good find. And with that, I think I'm going to end it. Oh, over 30 minutes. Let's see what else do we have here. CHW with it. Yeah, probably a good move there. CHW. Oh, yeah, I had to look. I mean, that's it's very intriguing. But yeah, thanks for all the comments. And with that being said, please remember to like, comment, and subscribe. And thanks so much for watching, and take care.